kicking off this morning with the Leaders in Energy Investment panel. So joining me today, we have Jeff Steketee, CEO at Semeru Energy. We have Clyde Russell, Asia Commodities and Energy Columnist for Thomson Reuters, and Joe Oliver, Managing Director and Co-founder at Delorean Corporation. So thanks for joining me this morning. And just to start us off, maybe you could just give a brief introduction to yourselves and your background in the space, and then we can get into the questions.
Okay, yes, Jeff Steketee. In fact, I'm semi-retired now. I'm the chair, not the CEO anymore. But Semeru Energy is an investor in the natural resources space. Typically have been in fossil fuels, now pivoting a little bit towards renewables, and mining battery metals is our theme.
I'm Clyde Russell. I work for Thomson Reuters as a columnist. I cover energy markets and commodity markets in Asia. What I really try to do is lead and be part of the commodity conversation across the region. So I'm looking for trends. I'm looking at supply, demand data. I'm looking at how everything interacts with each other. And, you know, since I'm one guy, I can't produce 400-word or 4,000-word in-depth analysis, but what I tend to do is try and identify trends and see things before the market gets there and sort of have interesting discussions about it. So that's kind of what I do. I've been doing this I've been back at Reuters for 14 years, but I've been covering commodities since the 90s in a variety of countries.
I'm Joe Oliver. I'm the Managing Director, co-founder of Delorean Corporation. So we focus on the conversion of organics to green gas, and we're in a transition of a build, own, operate pipeline of projects across Australia.
So I thought, actually, it might be interesting, maybe Joe, if you wanted to tell us a little bit more about what that is, like what is that green gas and how it works, and then we can kind of integrate that into our discussions.
Yeah, that's fine. So our focus is on renewable natural gas, which is the green gas that we talk about. There's a lot of discussion around hydrogen, but what we're seeing in Australia is that green gas has the opportunity to offset about 20% of fossil fuel that's being consumed in Australia. And I think what we've also seen when we've seen what's happening in Russia and Ukraine, the dependency that Germany had on Russia for gas has been reduced by the nature of the facilities that we build. So we build bioenergy facilities that is anaerobic digestion, so the biological conversion of organic matter for gas, renewable natural gas. So that's our focus as a business, and the discussion around energy transition is more around how we can decarbonize the pipeline, the network, effectively by utilizing green gas as a solution that's renewable natural gas. So no need to change infrastructure like what we see with hydrogen and other gas systems.
So thought we could talk about, starting off looking at the role of LNG and gas through the energy transition. So this whole idea of, and it came up during the Russia-Ukraine war about energy security. So how do we maintain that while still moving towards this transition?
Well, I can have a quick stab at that. I think the one thing that we learned from the Russia invasion of Ukraine is that energy security trumps everything else. So you had a situation where suddenly there was concerns about Russian supply via pipeline into Europe. What did the Europeans do? They grabbed everything that they possibly could. So they started to suck as much LNG away from Asian markets. The price went up. They also started to suck up as much coal as they could. And the countries that could return coal-fired power, that's what they did. And all climate concerns, all energy transition concerns went out the window at that point. Once they'd actually got themselves through that and they'd worked out that they can survive without Russian gas, then all the energy transition concerns came back. But they came back, in my mind, in a slightly different way. It no longer really became an idea about picking a winning technology or picking a winning strategy, picking how you're actually going to do it. It became, we're going to probably need every single available resource to do the energy transition. And the only one that we really want to get rid of as fast as we possibly can is coal. And that's kind of like how you could see the Europeans thinking that way. It's probably been replicated in much of the developed Western world, is coal is now the enemy, but we're happy to use virtually everything else in driving the energy transition. I also think if you look at it, the LNG industry in particular has been very good at selling themselves as part of the solution rather than part of the problem. Ultimately, you can't get to net zero if you're still going to be burning a lot of natural gas, and that's something that they try to ignore, but it's still something that's really there. But their main selling point is we're better than coal, and they are better than coal. So, they're not lying about that. They're still bad, but they're better than coal. But I think if you're actually looking at the energy, if the key word in the transition is transition, you are transitioning to someplace. And I think LNG has got a very important role to play in that. But there are several concerns, and I would say the main one, if you're looking from an Asian perspective, if you're trying to get coal out of the mix, LNG has to be cheap. It can't be expensive. And that makes it kind of iffy, because if you're an LNG producer, you want to sell as high as possible price, but in order to sell the volumes that you want to produce, the price has to be low enough to displace coal or make it competitive against countries that have a choice. And I think the other thing you've got to look at in the broad energy transition is LNG likes to see itself as the solution to getting coal out of the mix, but it's also got to compete with renewables firmed by storage solutions, be that pumped hydro, be that batteries. And every country is going to be different. If you look at this country, it's going to be very, very hard to decarbonize because you haven't got the space for solar, you haven't got a good offshore wind resource. So how do you do it? So it's very difficult. But in certain countries, it's going to work very well. Solars, wind, battery storage. Countries like Australia, you could look at some in China, parts of South Asia. They're all going to be very good at that sort of thing. So I think it's going to be different solutions in different countries, but within that space, virtually everything that we can produce is going to be needed, especially if you say coal is your number one enemy, and then we're going to get rid of that first, then everything else is needed.
I'll just add to that. I think what we're also seeing is a few of our clients can't electrify. So the need for LNG or for natural gas is required. Brick kilns, for example. So we've got a couple of clients that are brickworks that own and operate brick manufacturing. Now, for them to electrify, they wouldn't be able to get the heating value required for the brick manufacturing. So for us, it's more about how do we decarbonize their requirement as opposed to electrify. And I think when an energy transition is at the forefront, it's more about how do we meet the requirements of the manufacturing, the industry, that's not solely looking at the electric side of the energy transition as well.
Well, yeah, I see the demand for LNG over the next decade actually increasing as Clyde said, just trying to displace coal. As he also said, I think he covered a lot of good ground there. But security and affordability in that sort of triangle of energy are the main factors. And in developing nations, and we see Asia as part of that, where 50% of the population live, and where not everyone has access to electricity, it's very difficult to tell countries that you can't burn coal to deliver power to your constituents. So we see that, and it needs to be driven by public policy, that gas will continue to displace coal. But I also say, and this is my view, and this is actually our fund's view, is that oil and gas will remain a significant constituent of the energy mix for a long time to come. We're talking decades. You can't wean yourself. It took something like 50 years to get the world onto coal, and another 40 years to get it onto oil, and now we're saying in 2 decades' time we want to turn the corner onto renewables. It's very difficult. I know the pace is quicker these days with technology. But I think that oil and gas, and we still need investment in oil and gas for the next couple of decades, because we can't wean ourselves off it that quickly and still have that security of energy.
Absolutely. I mean, maybe we can dive a little bit deeper into that investment side of things. So there has been a bit of a, a shortage of capital for new projects in the energy space. So, where is the funding coming from right now, and how can we address this kind of shortage?
Okay, I'll jump
Go
in
ahead.
again. Sorry to keep going. So we're open for business on oil and gas funding, and I think you would say that the US very much is as well. So there is a lot of capital, whether it be from financial institutions, whether it's the banks or the private equity funds in the US. They're still actively supporting fossil fuels, oil and gas, more than coal, and because they realise that we need it going into the future. I also see that it's difficult, and I've looked at some of the trends over the last few years. Public funds into renewables did very well in the early 20s, like 2021, I think was its sort of watershed year. But after that, values have declined. So if funds, companies such as Joe's are going to the market and saying, "Hey, we would like your money to expand to do what we're doing because it's good for the environment," which is absolutely spot on. It's difficult to attract that money if the investors are not seeing a good return. So I find that the situation now, it might be two-speed in some ways, where in the US you've got a lot of capital still being allocated to fossil fuels. In Europe, maybe less so, and Clyde might be able to comment on that. In Australia, it's a bit more fractured. The banks are lending money to existing clients, not onboarding new ones. Very difficult to do that. And there's pockets of private equity, such as ourselves, that will still look at projects. So it's getting more difficult, I've got to say, but their money is still there.
Yeah, I'd agree with that point. I think what we're seeing is the main banks with the strong ESG policies are pulling back from investment in the oil and gas space. But if you've got a decarbonised renewable path, then you align to more of an impact type of fund. There is impact money out there. I think the main element of impact funding is meeting sort of higher hurdle rates than what we're seeing that the banks would require. So it puts quite a bit of pressure on the return from a renewable perspective to achieve a higher 12, 15, 20% return than what the banks would traditionally see at that sort of 6, 7, 8% return. So definitely money out there. I think it's the alignment as Jeff's highlighted and just the ESG side that's been pushing through to limit certain areas, but bring more funding in others.
I kind of look at this in broad trend terms, and I always say that the most useful advice ever given in human history is follow the money. So if you actually look at where money is going in the broader energy sector, it's largely going into what would be termed renewable projects. But that also has the sort of a weird contrary effect, because the more money that's available for these things, the more dodgy, less well thought out projects that actually get up and get funded, the returns drop, and then, as you say, you don't get actually the return on investment. So people become less keen to invest in it. So it's kind of like a weird sort of thing. You've got lots of money for renewables, but you can't make money out of them anymore. So you can actually, on the contrary, you can actually make money on the more unloved parts of the market, which doesn't seem to make much sense. But that's what I'm seeing. There's a lot of money available for renewables, but it's getting really hard to get good projects off the ground. I just look at Australia. There's so many wind energy, solar farm, big battery projects that are currently in the pipeline, worth hundreds of billions of dollars. But it's getting harder to get them to fruition because people are looking at, what's going to be my return on that investment? And if you actually look at where all the renewable money is actually coming from and where it's being spent, it's really Chinese money. And if you actually look at what they're doing, I mean, China installed more solar in August than Britain has in the entire country. I mean, it's just the rates that they're doing it at are unbelievable. But that's not money that's really available some of it's available outside of China, but it's getting harder to use Chinese financing to do projects in other countries. Let's be honest. So I think there's a sort of a problem that there's a lot of money that wants to be in renewables, but is questioning how it's going to make money, and then a lot of money that can't actually go into your sort of more traditional fossil fuels outside of America and outside of some other jurisdictions. The Middle East, obviously, you can invest there. And it's that kind of misalignment. You've got too much capital trying to get into one area and not enough into another area, but that's where the returns are.
So how do we fix that to kind of ensure the energy security as we continue along this path of transition?
The more and more I look at the sort of broad energy transition, the more and more I become convinced that it doesn't actually work unless governments regulate it and legislate it. Because I can't see enough market incentives. I can't see enough market returns for people to actually want to put their own money in and make a decent return on it. It's got to be sort of incentivized through government regulations, laws, subsidies. I hate that word, subsidies. I much prefer the idea of incentives. And that will change behavior and will allocate the capital into ongoing renewable energy things. If you're looking at, I think the market can probably take care of funding the remaining fossil fuels things that we actually will need. And I agree that you're not going to get LNG, you're not going to get oil out of the mix for a very long time. And quite frankly, you're not going to get coal out of the mix for a long time as well. Especially if you actually look at it now, something like 80% of the coal that's burnt for power generation is done in 3 countries, China, India, and Indonesia. And they're not going to move away from coal. What you might be able to do is move people who currently rely on seaborne coal out of it. So Japan, Korea, Taiwan, perhaps Vietnam, other countries that import coal, you might be able to get them off it, but you're not going to get rid of domestic coal.
I think it's all about the cost of energy. So the reason why some of these renewable projects, certainly the offshore wind, isn't getting up because the cost of energy, it needs to be at $150, $200 a megawatt, and getting a long PPA power purchase agreement from an offtake perspective is difficult in that. I think whilst you've still got fairly low cost gas or coal in the mix, then it's not supporting the transition as quickly from what we're seeing, certainly in Australia, and I think that's probably true for around the world as well.
And I'd say, in addition to that, where I'd like to see some of the maybe the activist style investors that are giving oil and gas a hard time put their money, rather than just agitate, put their money into technology related to renewables. I think if we make those technological breakthroughs, for instance, if we can lower the cost of hydrogen, then you're going to get a larger uptake, and that's going to help with the mix and the security. We saw that in solar. There was rapid technological advances which lowered the cost, and now solar is one of the key planks to power generation, fixed power generation into the future. So if we can apply that into other areas such as batteries and even making the grid more efficient, that will help the thesis of moving away from fossil fuels.
I mean, you brought up earlier this idea of subsidies or incentives by the government. So have any of these that have been launched so far, like the IRA, have they actually made a difference?
Yes, but not at the scale that is needed. If you sort of look, what has the IRA actually done? It's really trying to diversify supply chains away from China. And you would say that so far, I mean, I know it's early days, it's only been in place for a couple of years, but so far you're not seeing a massive swing away from China. I mean, China's still basically the place where all these things get refined and produced. And it's going to be very, very hard to sort of, if you want to build a renewable energy supply chain that doesn't involve China in any shape or form, that's going to be really, really difficult to do. And even the sort of billions that are available in the IRA, it's a grain of sand on a beach type stuff. It's not enough. What the government did in Australia is it's not even a grain of sand. It's minuscule. It's just not enough. It helps some projects get up and running, and it helps at the margins, but it doesn't really alter the idea that the whole renewable energy transition is basically a China story, because they are the ones providing all the stuff. I mean, I'm absolutely 100% certain that the solar panels on my roof were made in China. And virtually all the batteries in cars and things like that, they're all made in China, and it's very hard to see how you're going to move away from that. So if the Western world wants to change and genuinely wants to get away from China, they're going to have to do a hell of a lot more regulation. They're going to have to sell it to a skeptical public because it's going to cost money, and ultimately the consumer is always the one who pays. So they either pay through higher taxes, or it doesn't actually matter how they pay, they end up paying a price. So to convince people that that price is worth paying is going to be a very difficult thing for governments to do.
And I'm not putting anybody on the spot or trying to, but can anybody give me an example of when we have regulated into a successful market?
Well, you can say that the whole initial sort of solar/wind in Europe was regulated or subsidized to the point of competitiveness. So if you're talking economics 101, the best use of subsidies or incentives is to get a nascent industry up to the point where it can stand on its own legs. And I think you could sort of say that actually happened largely with wind and solar in certain places in the world. You've got that sort of, it's now got to the economies of scale. But, as one of the speakers yesterday said, the first battery pack in the first Tesla cost $80,000, just the battery alone. If you actually, there's another industry that has enjoyed subsidies, particularly in China, but you've now got the price of those batteries way down. So you can incentivize and subsidize your way to some level of success. In general terms, I agree with you. It's very hard to do, and there are way more examples of failure rather than success. But if you say the energy transition is something that the world needs, and we need to go down that path, then that's the only way I think it really happens.
I think to add to that, where there is a subsidy market and it's grandfathered for a period of time, then it enables investment. I think what we've seen in Australia is the lack of subsidy that's driven grandfathered investment that enables a very clear return. I think what we've seen in Germany is, as we touched on earlier, the need for gas coming from bioenergy in Germany that's been driven from the subsidy and the incentive that's been put in place that's taken away the pressure from Russia and Ukraine. So I think that's probably one of the main successes from what we've seen over the last few years. But I would say subsidy drives investment from a support perspective, but having a clear policy that locks in for a longer period of time really enables that return on investment.
And I would add to that, Joe, that as an investor, we'd be very wary of transient sort of incentive programs. If they're going to be longer term, that's fine. But if a business has to rely upon the subsidies or the tax treatment for their profitability, then we would maybe take a second look at that.
I mean, one other thing we haven't really talked about is the opposite of subsidies is taxes. So if you actually I think what you would need, particularly in Asia, is like a regional carbon tax that all the big economies in this region agree upon. So everybody from Japan, China, India, Indonesia, Australia, all those countries having a sort of common carbon taxation regime, much like what you have in Europe. That would drive a lot of change as well, or would have the potential to drive a lot of change. And let's be honest, governments around the world are going to be looking for more money. Income. Governments are always looking for money, but if you are driving away investment and consumption of fossil fuels, a lot of governments rely very heavily on taxing fossil fuels right now. So if you take that revenue away, you've got to replace it with something. So you might as well replace it with a positive tax, if you want to put it that way, a tax that drives what you want. So you want an energy transition, so you tax the things that are holding back the energy transition, and you incentivize the things that allow it to proceed. So, I mean, right now, there's virtually hardly any carbon taxing in Asia. There's pockets here and there, but there's no systemic way of doing it. And I think that's something that would need to change. Again, if you look at the European example, it has worked. Britain is about to shut down its last coal-fired power plant. They're not experiencing energy shortages. There's no blackouts in Britain. They have managed to transition their electricity generation away from coal, and they've done it quite successfully, and they've done it at a relatively quick pace. And they've also done it at a relatively reasonable cost. Electricity prices in Britain are not unreasonable vis-a-vis their competing nations, their neighbors. So it can be done, and it can be done successfully. But you've got to really get that public policy right. And that's where I think the biggest challenge is, because how can I put this tactfully? I think politicians in most countries, the best you get is barely competent. That's the best politician, is the best thing you can say about them is they're barely competent. Most of them are idiots. And that's kind of your main issue, is in dealing with a group of people who are always focused on the short term if they exist in a democracy and they actually can be voted out. And short-termism doesn't make good policy. You see that in all genuine democracies. And in countries where the politicians have a little bit more security of tenure, then they tend to be more interested in lining their own pockets than they are in actually genuinely driving positive outcomes for their countries. So I think that's your greatest weakness is the lack of effective public policy and a lack of effective ways of doing this. And that's what's holding everything back.
Yeah, and just to add to that, and I think Jeff's point, I think in the absence of any subsidy, picking on some of Delorean's successes in the Australian context, we've really focused on the diversification of revenue streams so that we're not just reliant on energy. We've got multiple revenue streams from the bioenergy sector that we operate in, from biofertilizer, biogenic CO2, energy credits, energy and gate fees for the fuel as well. So for us, whilst the energy transition is one part of the puzzle, we as a business have to look at multiple revenue streams where we don't have clear policy that drives that through to get the commercial returns that's required for investment. And that's probably one of the main elements for us.
Well, I would say, just to pick up on what the gents are saying, I do think that the carbon credit regime is a good market-driven mechanism to helping reduce emissions over time. It does incentivize landowners to actually invest to grow trees, etc., for carbon offsets. And back to my earlier thematic, we need the oil companies to be in the mix for the next couple of decades. And the oil companies have effectively stated that their business model will remain, that they'll be in oil and gas, maybe trying to shift more to the gas than the oil over time. But their way of reaching net zero is to buy offsets. So that's pumping money back into that sector. And I agree that we would love to have some sort of Asian-based price for carbon, but I see that as a long time coming, to tell the truth. And in fact, the inefficiency of the markets right now is something that we're tapping into because we think it could be profitable for us with arbitrage opportunities, etc. So I think it will come. I think it will be market driven. I think you will reach a price for carbon that might not be universal, but will be similar across different regions. And yes, bring it on.
All right, so I thought, just to continue on, maybe we can just talk a little bit about kind of what you foresee as that future energy mix as we kind of continue to progress towards net zero, but as we've all mentioned, kind of needing energy security, needing the investment. How do you see the industry kind of progressing and things moving along?
Like, I mean, you can break down if you break down the sector a little into some components, you've got the sort of power gen and industry, and you've got transport. I think the changing of transport, which is maybe 25% of the total emission envelope, from existing reliance on fossil fuels to something has less emissions, is stickier. It's tougher to do. Can we bank on hydrogen reducing its cost so it becomes affordable? Can we get ammonia up to scale to help in that regard for shipping? I think that's why I come back to saying fossil fuels will be part of that mix going forward. In terms of the other components, which is the fixed power plants and industry, yes, I think that we can move, and we have moved, and will continue to move towards the renewable energy displacing fossil fuels. But coming back to what we were talking about earlier with solar and wind, it's difficult to get people to invest in those things. Solar, as Clyde said, it suffers from the fact that we just don't have enough space, and where you get the sun necessarily isn't where you need the power. So that's the efficiencies in transporting the electrons and the battery technologies needs work. But rolling out whatever you need, like I've heard 3 gigawatts of solar power per day to meet our 2050 targets is impossible. So the mix, it's going to be component parts of solar, wind, fossil fuels, and I hope that hydrogen will continue to evolve where it becomes cost effective, and potentially nuclear holds a little place going forward as well.
I think the more I sort of look at things, the more I think the energy transition is going to be messy, uneven, and very varied and very different in different countries. Certain countries are going to have tremendous success at doing things quite quickly in certain sectors, and they're going to lag in others. Again, if you look at sector by sector, it's also the thing that we really haven't got quite is which technology is going to be the predominant one in each decarbonization sector, and we haven't really got the winners yet. It may be a case that we never get a straight up winner, that we get several technologies competing with each other and all being successful at the same time. I mean, for those of us who are old, I always think that right now we're in that sort of Sony Betamax versus VHS moment. We don't know which one is going to win out. In what actually happened in that case is the lesser technology, the one that wasn't as good, actually became the global standard, and the better technology, Betamax, disappeared. But if you actually look at that sort of thing in the energy transition, we're at a sort of inflection points. It's very frustrating to live through it, but it will probably take 5-6 years to work out, which is quite a long time in our individual lifespans. But in the overall transition phase, it's immaterial. But if you actually think, I think you're starting to see some clear trends emerging. In light vehicles, batteries are going to be the winning technology. Yes, battery technology may change what's inside and how the chemistry of it is made up, but it looks like battery electric vehicles are going to win that particular battle. If you look at more heavy transport, we haven't quite got there yet. The Chinese are going heavily into LNG trucks. There's also potential for battery trucks. Train transport is looking like electrification rather than diesel. Airline transport, very, very hard to decarbonize that. It would be almost impossible to make enough biojet fuel to supply the world's needs. So that's an iffy one. Shipping, very, very difficult to decarbonize that. LNG shipping is probably your best bet, but there's also people pushing methanol. You can make methanol from like green hydrogen, and then you need a sustainable carbon source like wood chips that as you harvest wood chips, you plant new trees. So you can make green methanol, but getting that sort of thing at scale is going to be very difficult. Power generation, it's going to be very varied. I think in a country like Australia, you'll get very close to 100% renewables firmed by storage solutions, and you'll be able to do that fairly quickly. But that's not going to work in other places. I think nuclear does have a role in certain countries. If you already have a nuclear industry, by all means expand it. So that would, sort of be existing nuclear countries, China, India, Japan, Korea. I think for countries that haven't got nuclear, going down that road you're too late and it's too expensive. So the overall sort of message is, I think, is it's going to be, the energy transition is going to look very different, and it's going to be very messy across jurisdictions. And the only way to sort of get everybody going in the same way is to try and get sort of global agreement on carbon border taxes or carbon pricing and things like that. And then you'll see it. But right now, the way I kind of look at it is, people often think of economies as like super tankers. Once they get going, they're hard to stop and they're hard to turn around. I tend to think of it as more thousands of little sailing ships, and you're trying to herd them all together in the same direction. But these ones want to go off there, and those ones want to sail that way. And I think that's the sort of challenge, is trying to manage a massive fleet of all these different competing interests and trying to get them to sail in the same direction. And that's going to be difficult. It's not impossible, but it's certainly a big challenge.
I think Clyde's covered most of that there, but I think it's clear that we need a blend of different energy sources and abilities dependent on the geographical location and what the output is to align to what the requirements are locally. I think that's probably the main element. It can't be solely reliant on renewable. There's got to be other forms of storage and energy sources that can be used to help that decarbonized path. I think it's more about trying to get the price at the right point to ensure that whether there's a carbon tax, that everything sort of levelizes to suit the right energy transition across the different nations.
Absolutely. Certainly kind of a lot of commodities, a lot of different sources of energy to be looking at moving forward. So that pretty much wraps us up for the panel. So I want to thank our three panelists, Jeff, Clyde, and Joe, for joining me. And thanks for all the participation from the audience as well.